Well, I don't have a life jacket, but it feels like we're going to have to either just keep one on in this market because even when we start floating up towards the top, we take on some more water. It seems like we can't stop the leaking. When will we get a good enough catalyst to rip us through these levels? Netflix comes in and beats the subscribers, yet we're down a little bit on the day. I don't know what's going on in this market. Gonna have to find out from Dennis Dick. Stay tuned right here. Welcome to Pre-Market Prep, where we get our morning started. Let's rise and shine. A lot of topics today, and we got Frank Holmes on today, Executive Chairman, Hive Blockchain, CEO, and Chief Investment Officer at US Global Investors. Let's get pre-market started. Coming to you live from downtown Detroit, this is Benzinga's Pre-Market Prep with your hosts, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I'd buy that stock for a penny.
With everything you need to start your trading day. All right, traders, let's get it started. Let's bring on Dennis Dick. Let's take a look at the SPY and the overnight action. And it looks like we just got close towards that 375 around. It looked like 715. Of course, I'm sure Netflix was helping out a little bit on that end. And then all of a sudden overnight, just starts leaking right back down. Mm-hmm. What did you see in that action yesterday, Dennis?
No, exactly what you just described. We had such an everything rally last night off of Netflix, which has held its gains. But the everything rally started to leak overnight and leaky, and then just gives it all back and we're down. So again, it's like Groundhog Day around here. The chasers punished once again, and I tweeted it yesterday when you were chasing with 375 SPY. I said, if you're buying stocks up here, you're doing it backwards. Fading has worked in 2022. Not just fading, the rips, but fading the dips too. Buying, on the weakness, selling into the strength. That is what is working. We have a 60-point turnaround here. Again, I'm going to keep saying what is working. In 2022, chasing stocks is not working. Chasing is not working. We said it twice. We'll keep saying it because I'm trying to pound it into your guys' heads. Chasing is not working. And if you are bullish and you think the low is in, well, you've got a dip to buy all of a sudden. But I'm not in that camp. I think we're still in the Titanic bob up and down phase. Feel like the show is on Groundhog Day too, because we're really going nowhere, Mitch, but we're still doing the same thing. But these are production days. We can still be making money even if the market's not moving anywhere just by fading all these little moves. So obviously, Netflix is very good news from the markets and moved up the tech sector. Tech stocks are outperforming a little bit here this morning. But you look overseas and Europe's a mess and China's a mess. And, and then you've got some warnings from, some companies, GNRC, which we can get to in a second. So, we're still at the beginning of earnings season. We still have a lot more information to come in here. But right now, fading is what is working.
And I will give a little bit. I don't have all the charts that Joel has, but I will at least give some comments.
I love your charts, Mitch. I like your charts.
We have the DXY up today. So dollar index is up. Right now, I'm seeing it around 112.90. Previous close was 112.13. So let's see what happens with the dollar. Will it continue to push into that 114, which is a monthly high? That's from September 26th, so 114.10. That's what I'm looking at on the DXY to see if we get through that.
And again, just to stop you there, in some markets, currency leads. In this market, if you're looking for indications, I'm not talking to you, Mitch, just giving a teaching point here. If you're looking for currency as an indicator, it's really not leading. The currency is not leading here. What is leading is actually the stocks. And then you have what happens is money managers are like, boom, okay, I'm nervous. They boom and they go into US dollars, and that drives up the US dollar price. It's the safety trade. So in some markets, you can have currencies, but the currency traders will hate me saying that. but you can clearly see, there's just a perfect inverse correlation between the US dollar and the S&P. So, S&P down, the US dollar is up. 98% of the days, US dollar is up when the S&P is down. So if it reverses the other way, the US dollar starts to show weakness there. So just keep that in mind for the currency traders there. You can use the US equities as an indicator for where your US dollar is going.
Yeah, and a big thing for me would just, if we could get through that 114. Now, it's not going to be good for the market, of course, but like Dennis says, it's already going to probably be showing up for us. Crude front month, WTI up at 84.02. Settlement price yesterday was around 82.82. So definitely getting a little bit of a bounce. And it really started bouncing around 4 in the morning. We'll see what happens with oil stocks. Can they kind of continue the lift? Yesterday, they pulled back. They got close to that 100. Sideways action right now on ExxonMobil. I think make it or break it day, kind of. Can you get above the 102, or are you going to crack back below that 100? Wouldn't want to see it crack if I was a bull for this move. And there's some big resistance right above it.
It's getting ugly here too. We continue to leak here this morning, just taking you back to the U.S. equity markets here. I talked those stocks. We just dropped another 5-6 points here since we started the show 5 minutes ago. So we continue to leak here. I mean, this market, it's a tough market, and it's a tough market to call day to day. I'll just go back to that too. Like, here you are last night. You think, wow, Netflix up $30. Gonna be a great day for stocks. What do? Everybody who bought that thing, every algorithm that had to buy stocks last night. Oh, Netflix. Oh, the bottom said buy. What do? Boom, overnight. The rug pull. It keeps happening.
Don't chase. I mean, comments like Minneapolis Fed President Neil Kashkari said he sees no reason not to push the central bank's benchmark fund rate above 4.75. So 4.75% in order to tackle inflation. And if that happens, well, yeah, we're probably heading down, right?
And that's the problem too, is that you just have so much Fed speak against you too, to your point here, Mitch. I mean, they're not taking back. They're not, I know. And then the market's like, oh my goodness, the Fed's still thinking about tightening. Well, they never stopped. We never got CPI in check. We never got the inflation in check. So it's like so headline driven because, and Joel's right from yesterday, the algorithms are just driving the bus continuously and they trade on headlines. So you get a negative headline, they sell stocks. You get a positive headline, they buy stocks. You get some Fed speak that's, been negative commentary for the markets for a long time here now. They sell stocks. So the news flow is the one thing that keeps me out of this market and the potential, and obviously there's money to be made just from predicting news flow. Maybe this earnings season is going to be good. We actually have had a pretty okay earnings season so far, which is shocking to me. I thought this earnings season was going to be a disaster, but the consumer still remains strong. United Airlines, which we could go into that earnings report, maybe we go out of order here, Mitch, because the CEO is on CNBC right now. They said that, the demand has not ticked down at all. So they're not seeing any demand destruction at UAL. I think it's coming. I'm shocked they haven't seen it yet. But again, to the point, we haven't seen CPI cool off yet either. So in the data. So, maybe it's not coming. Maybe this consumer is just going to continue to find ways to spend money. But the one thing is that if the consumer continues to find ways to spend money, the Fed's going to keep their foot on the gas pedal. So it's like you still lose. So, that's the toughest thing. But UAL, I mean, let's start with this one here. Nice rally overnight, not seeing the demand destruction that I keep thinking is coming, but major resistance up here in this whole $40 area. So I think it's a selling opportunity. Just my opinion, but I think it's a selling opportunity.
Seems like United Airlines coming in with a beat and a beat. EPS at $2.81, beating the $2.27 estimate. Sales at $12.9 billion, beating the $12.75 billion estimate. One thing that I could clearly say is, they're just passing down the extra cost, of course, of oil and what's going on with them having to increase wages to the consumer. And the consumer keeps paying up. Even though business travel hasn't truly come back, it seems like air travel overall has come back. And even though people say we're in a recession, the airport's
not showing up in the airlines, that's for sure. Big numbers, good numbers. Again, though, is it good news for, stock market investors that the demand destruction is still not showing up? Because I still think then you're fighting the Fed still. You almost want to see some demand destruction start, so to get that inflation in, to get the Fed to take their foot off the gas pedal. We continue to fight the Fed. If we're buying stocks, on these, decent earnings reports, we're actually fighting the Fed still. Tough market. That Goldman trader that said nobody knows what to do at this point in time, not one trader. From if you're going out more than 5 days, completely agree. I mean, these moves, the fading moves have worked, and there's still lots of production here. But to predict where we're going to be 5 days from now, almost impossible.
Gap zone to the left on the daily chart. That's going to be from the 13th, and you got the 10th. And so it looks like we're going back into that range. Will we get back above Tuesday high, 40.85? I think it's going to be tough, especially with the market that we're in. But sideways action, you can see it here from about June all the way until now. That's what we kind of want to see also, I think, in the market overall. Because if we could get a couple of months of sideways action, I think that's how you really start creating bottoms. It's not going to be all the time V bottoms, right?
Right.
We need to sometimes get some consolidation down there, find some price discovery. Everyone kind of be like, okay, well, and maybe valuations are starting to make sense. That's how we go ahead and find a bottom. And I think it's going to take some time there. So it's not a bad thing that, at least if we go back to the overall market, that we have been going sideways since pretty much October. But I think we need more than just, 1 month. We need like 2 or 3 months of sideways action. If we could stay around, let's say 360 by the end of the year, then all right, now I'd be feeling a little bit better that we could catch a rally going into next year. And then that could be a bottom. But of course, it's going to take some time. And we're going to have to see the Fed even show the smallest sign that they want to pause. And that's going to be the first sign. And then the rally would come.
And again, we may as well wait until we get a data point, because they've already explained when they're going to pause. Basically the sell-off last month was, and it was bought, which is a good thing. And maybe the bottom isn't. It might be. But I keep coming back to, wow, the risk out here, though, from a long-term investing standpoint is really high. So I'm like, how do I justify that? I mean, we can say stocks are cheap relative to where they were last year. That is correct. But relative to where they are historically, they're not cheap. And then you've got fighting the Fed thing. So it's tough. I think I'm still buying dips, though. I think it's a trading market. I think we keep bobbing up and down. So if we pull back a little bit more here this morning, I'll probably be buying stocks. But I'm still staying that 42% cash in the long-term portfolio. I just cannot go all in on this market here yet, because the Fed hasn't given me any signal that it's all clear.
And it's going to take a while. Let's go towards the major earnings of the day. What caught everyone's attention, what everyone wanted to see from, or what everyone was watching, because it seems like it. They came in, definitely Netflix kicking it out their water with their earnings report. And, let's talk about it. They gained 2.4 million subscribers versus their 1 million estimate, bouncing back to the positive. Netflix also stating that they no longer forecast additions each quarter in an attempt to shift focus from revenue and profitability. Their focus, of course, is now on it's on competitive excellence, and they tried to state that over and over. For some reason, it got my numbers deleted here, so here we are. Right. EPS at looks like 36 cents versus we have to have a correction there. Let me just.
It was $3 and change.
There it is.
Got it. I don't know. I just remember the number. So
EPS at $3.10, beating the $2.13 estimate. Sales were at $7.93 billion, beating the $7.84 billion estimate. Another thing to kind of point to, they did state in their earnings report there a little bit of some currency concern. Saying in Q4 22, we're expecting revenue of $7.8 billion, with decline entirely due to continuing strengthening of the U.S. dollar versus other currencies. Of course, you saw a mess of raises today. Deutsche Bank, Wedbush stepping up, a lot of different banks stepping up now with some price raises, of course, chasing the price. And we'll see how this affects other stocks. But let's first talk about Netflix, and then we'll get into the relationships.
Still long via my wife's RSP, so obviously still own my Netflix here. It's pretty
When
much
did you
back
get
to even.
it? I
I
don't
bought it
really that
twice.
guy,
I
but
bought when Ackman bought the first time,
okay.
which was terrible buy, like three. I don't know. Actually, it was a good buy. It went up after that. I bought like 330 or what was that first big down wave? The second
Like
day, I bought like 350 or 355, and then
okay.
it actually went up to like 450 after that. Should have rang the register. I was up like 80 or 90 points on that. And then it just leaky, and then obviously the guy down. Then I bought again. The second buy was what saved me really. The Joel theory, never frown, average down. Don't subscribe to that normally, but in this case I did. And I bought like 175. So, so I've come in and I'm basically almost back to even on this position here now, just because I averaged down, which it shouldn't do. But I just feel like Netflix is still something that's going to be there in the long run. It is not an expensive stock here. But I'm not chasing it up $30 here today. So, if we were to pull back, we get an overall market sell off, get back to like 230, 220. Do I add more to it? Maybe. I'm almost a full size position in it now, though. So just sticking with it. I'm not selling it, sticking with it.
How did Netflix gain so many subscribers? I don't know, but they definitely were able to get it done. Now, one thing is interesting is that, moving forward, they're strictly saying, let's stop talking about subscribers. Why would they want to do that?
That's a good question, actually.
Is that really a focus more on that we want to focus your mind on revenue, or more that we got to stop doing this whole comparing, that we need to kind of meet this bar, set this bar higher and higher and higher
Yeah, I think
every
it's the
time?
latter.
Yeah, I think
I
they
agree with you,
realize
Mitch.
that bar can no longer be just kept getting beat and beat and beat and beat. Eventually, they know they're going to lose some subscribers. That's normal to them now. Like they said, they're going to at least focus on their margins now. One thing that I think is important on Netflix, though, is their content spending, right? How are they going to adjust this? How can they figure out a happy zone between spending and making money, which is, of course, the most important thing now that they're focused on revenue?
Yeah. I mean, I get it from Netflix's perspective. As an investor, you want those metrics. As an investor, as a trader, you want those metrics as well. So less information is never good for us as traders. But I get it. They don't want to keep having to pump out and having to meet these higher bars. So I think you said it perfectly here, Mitch. I've already given the analysis on Netflix. So at
Let's
this
go
point, I'm
to the
holding it. One thing I
relationships.
will say is if I had on for a trade, I would sell it. If this was a trade, I would sell into it because, we fade rips. So I'm definitely not buying the rip today. And if I had it on just for a short-term trade, I'd sell it. But I've been in this thing for the better part of a year here now, sticking with it.
Let's go to the relationships. How do you feel it'll affect like a Roku that hasn't moved at all?
Yeah.
Essentially, I mean, it got the pop on the Netflix news, but it's coming back down.
Valuation is killing Roku. I mean, they don't
Yeah,
make
man,
money.
I can't even. I tried there to try to think, could I be positive on Roku? I
can't
can't do
either.
it.
I just think there's, this TiVo part 2, and I've been calling it that for a long time. Pisses a lot of people off, but I mean, this is, why I can't touch this thing. $490 is now 54. It's starting to look like it's TiVo part 2. A lot of them have them built in. Yes, a lot of the TVs have the Roku's built in. It's not a zero. TiVo wasn't a zero either, but it wasn't worth the valuation that it was trading at, and it's probably never getting back there. So unless they can come out and be the new streamer, and they do have a little bit of content there, but they need to, have a hell of a lot more content to even have a chance here. I think, I think valuation just keeps me out of this name indefinitely.
And Disney,
It's good
a
for
house of
Disney.
mouse.
It does, and I'm long Disney. I bought more. I got this almost perfectly too. I bought more. I think a 91 handle 4 days ago. So I was just going off that old 90. I bought more here, which I had a very small position. I brought it up to a medium-sized position. I'm not a full-size position in Disney. I'm probably close to a full-size position. So I had a double-sized position in Disney at one time, and then it had the big run-up, and I sold it at 121, which I talked about. Just it was a big move, 90 to 121, and it's come all the way back down to 90. So it gave me another chance near that same level. That's a huge support level. So I think on pullbacks here, I like Disney. The biggest problem is I still don't like stock market overall. And if we're going into a recession, which the Fed is going to force us into, there's gonna be less people going Disney World for a bit. So short-term pain. I think long-term, I think Disney's going to be fine. Short-term, I'm just not. I'm not buying a lot of stocks right now, short term.
Well, if you wanted your opportunity for Disney, below 100 out of the pandemic, it went all the way up to close to 200, back down below it.
I think
It looks
long
like
term,
Dennis
I
took
think
a
if you have
shot.
a 10-year time horizon or a 5-year time horizon, even, I think you're going to make money on Disney at $100. But I just
I
don't know if you're going to be able to pick this thing up, at 80 in, 3-4 months. I don't know that, but I'm in it. So obviously, I think there's a chance that this thing, could just keep going. So I'm in it.
And the last one we'll go is Paramount Global. I don't see this
This is a
company getting off.
disaster all
Yeah,
around.
this is just going to be a slow
Rallies.
week.
All rallies to be sold, in my opinion, in PARA. It's been an epic disaster. Obviously, the Wang thing and up to $100 is just the craziness. This thing was in a death, basically just, from 2017 to 2020, just straight down, got to as low as $10. It's been a value trap the whole time. The gift of 2020 and 2021 was just incredible. And it's not getting back to those prices for a long, long time. Is it going out of business? No, but does it continue to leak? I think so.
All right, let's get towards our next earnings report. We're going to go to Proctor and Gamble. So let's go to PG. Let's see how value is doing right now. EPS at $1.57, beating $1.56 estimate. Sales at $20.6 billion, beating a $20.44 billion estimate. PG maintains full year 23 organic sales growth outlook and maintain their EPS outlook. What do you feel on
not
PG?
great guidance here. Not great guidance either. And actually, when they say they reduce their all-in sales growth 1% to 3%, it was funny. The CEO was on CNBC and Kernan was interviewing him. And Kernan's pretty funny sometimes. He's like, so you're reducing your sales guidance? He's like, that's correct. He's like, well, the stock's trading up. He's like, I guess they don't care. He's like, and he wouldn't comment on the stock price. He's like, we're reducing sales guidance. So I don't know. The defensiveness of this market. We know this market likes to play defense. Procter Gamble's defensive stock. It has been beat up. I just think if you want to play defense, play it in cash. I feel like Procter Gamble is an expensive defensive stock where cash, right now, PG only gives you 2.81%. Cash is going to give me 4.1, 4.2, 4.5 maybe. And I can, just sit there and don't have the stock risk. So I see no reason to buy Procter & Gamble. Same reason, Johnson & Johnson. When it was trading up yesterday, I was like, no, I'm not interested. I feel like PG, same story. Does PG go red? Possible. Again, though, this defensive nature of it, we're on a risk-off day. Sometimes PG can catch a bid because of that. But I don't want to buy a stock for a 2.72% dividend or whatever it is. I was looking at JJ, 2.81. And, the sales growth is slowing. I don't see no reason to buy PG.
If you're looking for pullbacks, I would say around 129.70. We'll see what happens today. Definitely kind of more of a risk-off type of day, at least what it's seeming like right to start the day. Of course, that could always flip towards the open. We'll see what happens to PG. And just overall, just wanted to take a look at household personal products. This is an index that I have with my TC, and you can see how it's been bouncing, but has been in big decline since pretty much, I would say, August 16th. That's kind of the topping action. So pretty much we've been down about 2.1 months. So it could get a little bit of a bounce. I think you might get a bounce today. Well, will that continue? Yeah, I think there are rips to sell and not bad to maybe rent them today. We'll see what happens in PG. All right, let's go to the next one, ASML. ASML is an important stock, of course, one of the leading semiconductor equipment materials stock. So let's talk about their earnings report. They reported Q3 EPS at $4.32, beating the $4.01 estimate. Sales at $5.83 billion, missing the $5.93 billion estimate. Interesting note that was included in the earnings report. ASML said that it expects the direct impact of the U.S. chip curves on China to be limited.
Trading overseas already, so the market is active, so it's kind of priced in where it wants to be. So don't expect like huge moves off of our open because it's already trading actively here. Stocks in a clear downtrend. I sell stocks that are in downtrends when they rally.
Yeah, I think this is definitely a pop to sell, but I mean, full disclosure, I was able to short this one yesterday and make a little cash on it. So shorted that gap up, and we're getting another kind of gap up move here. And I think it might be just one of those gaps and fails this company
I'm
tends
not
to
making any trades on
often do in it. We'll see what happens. ASML. I'll kind of be watching it out the open, but not a bad note. At least saying that it would be limited. I thought it would be worse for ASML, so at least it's up on that news right now. Let's go to the next earnings report. Let's keep this moving here. Let's go to actually Adobe's pre-announcement there, giving some guidance here, updated guidance. So let's go to that one.
Sneaky guidance last night, right as Netflix reported. It was just slightly after, like a few minutes after, Adobe gave some guidance here. So they snuck it in there. Give us that Adobe numbers.
Adobe sees full year 23 sales at 19.1 billion and a high end of 19.3 billion versus 19.82 billion estimates. So missing there. Adjusted EPS at $15.15 to a high end of $15.45 versus the $15.53 estimate. They did reaffirm at least Q4 guidance. Jeffries coming in here and maintaining a buy on Adobe, lowering price target to 420. And there's some other ratings out there on Adobe now. How do you feel about this stock, Dennis?
The guide, it's actually a slight guide down, but this market's like, it's not that bad. We can take it. And that's why the stock's trading higher. So it's interesting how, this is turned. And this is the one, fear as being too much cash right now is that this market starts to find silver lining and the guide downs gets bought. So slight guide down, but they're buying it up here. And the reason I think it's just such a slight guide down that they're like, hey, that's not bad. And they did reaffirm Q4 guidance as well. So with that being said too, you're getting to a point on Adobe where valuation, this was always a growth stock with a nosebleed valuation trading 45, 50 times earnings. And it's like, no, I'm not paying that. We're getting down like 25 times earnings now, 27 times earnings. You're getting a little more reasonable. This ever come to 20 times earnings, where we're like are under 20 times earnings? I think it's a buy if it comes down to 20 times earnings. So if it was to fall down, and not saying it's going to do that, but if it was to fall down like $200, I think you're backing up the truck. So you're getting to a point where Adobe, if you're buying it now, you're probably going to be happy 5 years from now. But does it get cheaper yet if we still continue to get ugly? I think it's possible. But I would put it on the watch list. This would be one that I would want to own at a certain point in time.
We'll see what happens on Adobe. Can it get back into kind of that gap zone to the left? If you take a look, I'll pull it to the hourly chart, and you can see we've been trying to get back above the 302 level. I would definitely be watching for a move above 304 today if you're kind of get bullish on Adobe. Takedown level on the downside, you're going to look for a breakdown through the 292 going to 290s. That would be kind of more an Adobe breakdown there. And it's just going sideways right now on the hourly. We'll just look to see what happens out the gates. And I think a lot of it, of course, we can go back to the SPY pulling back right now. That's not helping it right now at 368.83s. Going to see if we can hold kind of support.
Giving back 3 years of gains here too. So, yeah. That's one thing to consider as well. I think Adobe's going to be a buy. And I think I've got it on the I want list. I just don't think it's quite cheap enough yet.
Yeah, I like the next monthly level down towards 257. I have that drawn out for a while now. We'll see. We'll see if we're around 250s.
Today it's going to show some strength, though. I don't think it's happening today. It's already holding up well.
Could get towards 300.
They're already saying it's not bad. This is one this could actually get a sneaky buy. So from day trading perspective, I like it actually.
Yeah, in a shorter time frame and on 5 minute, you can see kind of a trend line right there towards that 300. So we'll see if we get a break of 300 towards the bell. Let's get out of Adobe. Let's keep going. We got another earnings stock. I wanted to do one more. Intuit Surgical, ISRG, coming out with some earnings today and getting a spike. So at least we can bring some positive outlook here. Their EPS at $1.19, beating the $1.12 estimate. Sales at 1.56 billion, beating the 1.52 billion estimate. This is ISRG, Intuit Surgical, and we'll see if they can get out of the rut. They definitely bounced off of that bottoming action there. It's the medical instrument and supply company.
It's come down a long ways from the highs. It's still expensive, though. and it's off the highs, but I think I'm still fading. You still got this clear downtrend here. I know, again, I'm sounding like a broken record here, but stocks and downtrends I'm selling rips on. It's given back 2 or 3 years of gains too, which is par for the course for a lot of these tech stocks. At a certain point, this will be a buy as well. I don't know if that point's 150, but I don't think it's 214. So I'm not jumping and chasing. Again, this market, I'm not making money buying stocks up 10%.
I think you could get a run maybe towards 220, but I don't see too much more than that. It's just going to be sideways for right now. Let's go to
what stocks do you like, Mitch? Let's just go on a side. We got 3 minutes here.
Yeah.
What stocks? Is there any stocks you do like here right now? Like, I'm kind of the same thing. I'm like, is there anything I do like right now that I would buy here today? Because we're getting a pullback here. We are now 80 handles off where we were last night. This is a dip. And if you think the bottom is in, and I know me and Mitch aren't in that camp, but let's just play bull camp for a bit. This is the kind of day to buy stocks if you're full on rah, the bottom is in. This is the day. This is the time, like right now. Yeah. Is there any stocks that you would be jumping on here this morning?
I mean, it just depends on where you're looking at, right? Because this is a technology index, and I tend to think that everyone's thinking, when will technology lead us back, right? Is technology let us down? Well, when will technology turn around? I don't see it yet in technology. At least I can say that, we've had some bounces. Technology is not an area that I'm liking right now, unless you may be looking at solar to get another little bounce. I did see some of those start bouncing.
They've been hit hard.
But they've been hit hard also. And so it's just.
Would you buy the tan?
Not tan. If I'm looking at any of them, of course, I'm looking at FSLR and I'm looking at EMPH. But you can see EMPH, I thought it would maybe hold that gap down and then just start making its way back, but it's battling on the way down also. Technology, even though it gets kind of a lift, even with something like a climate bill, still not getting that lift. Now, industrials are coming back, which is a little bit interesting. That caught me by surprise yesterday. So, of course, I'm still thinking of next year for infrastructure bill kind of outlook. So I did see kind of like Deere coming back. You can see here on the daily chart, it is trying to come back towards the 380s. So if you're trying to think about maybe play here in Deere, that doesn't look too bad. Cat likes to lag behind it. So maybe look for Cat to kind of lag first and Deere really give you that breakout through the 380s. Then look for Cat to kind of catch up back towards the 190s and the 200s. But these are some stocks that I would keep in mind. And then utilities are bouncing back, but this is more of a renting play. It's just a beaten down play. I would maybe look at like an NEE to get just a little bit of a bounce back, Duke to get a little bounce back, but this is not going to hold. And so to me, if you're looking at plays and you're thinking the bottom, where do you go? I mean, that's the hard part there. I don't see it. Maybe healthcare showing some bottoming action here. So maybe you're looking at some healthcare starting to turn around. Let's see if there's any of these that kind of point to more of a stronger outlook. I'd say healthcare plans. And I did see one area that didn't do too bad, which is this stock today, ELV, Alliance Health. What I like about this one is that it's in a really interesting area. So this one's going to trade with McKesson and also Cardinal Health. These are coming back. If you're looking at some stocks that are looking interesting, like look at this Cardinal Health chart. Nice little daily chart all towards the top. Nice little break, holding the trend.
You still like the relative strength plays. You're sticking with relative strength.
Yeah, that's what I would have to stick with because those are the only charts that seem to make sense, right? I'd even look at oil for a bullish play today. I know that, you don't feel that way on that play, Dennis, but the daily setup, relative strength, that's what I'd stick to. And I'd be renting stocks. I'm still not in the camp that this is the bottom.
Let's go see what Frank says. Maybe we can jump in.
Let's go ahead. We'll get out of my charts. We're going to get to our interview today. Excited to talk all different areas. Of course, let's go ahead. Let's get Frank's home on, Executive Chairman of Hive Blockchain, CEO and Chief Investment Officer at US Global Investors. Welcome back on, Frank.
Great to be back. Money Mitch.
It's good to have you, man. I like the background, man. I got to work on that type of office. Dennis, we know.
We got to work on that. That's how you do it right there, Frank. Looks beautiful.
Gonna have to get my mining game on.
Thank you. It's my den. my library
Oh,
den.
oh,
That's a
it
beautiful den
seems like
right
a
there.
great place to be. And let's start talking first thing. Let's stick to the airlines and talk a little bit maybe on Jets ETF. We just got today United Airlines earnings, and we've already gotten a look into Delta. How do you see the air traffic out there?
Well, I've just flown back from Europe and was in Amsterdam last week, and it's improving dramatically. And you saw the United 25% higher than was expected. Price of tickets are expensive. The options to fly, so they have pricing power. There's just not as many flights as you used to have. So the airlines are in a very strong position. But Jets has come off. If you go back to when it bottomed at $11 in April of 2020 and it surged to 28, that was all future thinking of anticipation of the vaccine and the economy would turn around. And now the great concern is the economy is not going to turn around and that we're going to have this recession. So you're seeing the sort of opposite. However, the fundamentals of the airline industry are improving dramatically. So it's always sort of this discounting 6 to 9 months out. But I think the worst is behind us. In this sort of when will we get a peak in yields? And so what we're looking for at US Global, very short term, and what we've seen are 10-day. So if we can get a 10-day low in 2 and 5 year government yields, and a rally in the stock market makes a 10-day high, that would say it's sustainable. Otherwise, we've seen nothing but bear market rallies. You get these big surges, but the yields don't validate and confirm the stock market rally that they peaked. So we're trying to look for that, and we've yet to see it. But positively, gold surged above its 50-day moving average. Then it came off just slightly below it. But I think that gold is very much poised going in the next 6 months for a huge upside reversal.
Frank, I just want to talk about the United Airlines earnings to a certain extent here this morning because just listening to the CEO on CNBC was on there about an hour ago. They're not seeing any demand destruction here. I mean, they're seeing actually, record sales and people are still doing stuff. I mean, you keep thinking like if they keep raising rates, eventually it's going to hit the little guy and eventually it's probably going to show up in these earnings, but it's not showing up yet. Why is the consumer so resilient and especially in travel?
Well, I think that's the supply of options for you to fly have been contracting. They've not expanding. So they have pricing power. And two, there's a new tourist animal out there. It's a business tourist person, and it's called the Zoomer traveler. And I think that's a rational reason for JetBlue going after Spirit, because Spirit dominates the Caribbean islands in inexpensive flights throughout the Caribbean. And what we've found is a lot of people found how to run their businesses from home, and they do not want to go back to the office. So they find the cheapest holidays and they work from Cancun so they can walk on the beach in the afternoon. And they sit there on their computers coding away, writing reports, doing Excel analysis and sending them back. But there's like 1 million of them that's been estimated that are traveling all through the East Coast and going south or going north. So I think that they're putting a lot of demand into the equation.
And so, okay, so yeah, so there's all different considerations here, and there's so many, because I come in, I just think, okay, well, people have less money, they're going to spend less, but obviously, I never really thought about airlines having. I want to go back to what you said, pricing power. I've never really thought about that before. If you've taken down the supply, not less flights, all of a sudden there's like a pricing power. And what we've seen, like, I'm not comparing airlines to Pepsi, but Pepsi is your classic pricing power, where people are still going to go. They can pass those costs on to the consumer, the increased costs. That's that's enlightening to me to think of the airlines having pricing power. Do you think that is sustainable? Do you think like that pricing power can continue, or do you think this is just a temporary trend and eventually the supply is going to come back and then the pricing power will dissipate?
Well, I think with this concern of a recession looming, that the airlines are not going to expand as readily, and also they're constrained from a shortage of pilots, a shortage of workers. And you're also seeing some of the policies, particularly in Europe, on climate change. Like one of the best airports in the world has always been Amsterdam, especially in Europe. Well, they basically cut back on the number of planes allowed to land and take off to deal with what they perceive as a big climate change issue. So they have also been restricting the supply, but the demand is still robust.
All right, let's get into a different area that I want to take a look at. Of course, when we're talking about the airlines and we get into kind of the leisure and we're thinking about the holiday season coming up. I'm even thinking about it. Have some family in Puerto Rico. I'm looking at the prices and I'm like, man, it's expensive, but you got to go see family. And I feel like this is what's probably going to be happening this holiday season, even though we see the prices a little bit higher. The consumer's still willing to pay up. Do you feel that's going to happen, Frank?
Absolutely. I don't see any abatement taking place for the next 6 months. And I think you're going to get fundamental surprises in the airline industry. And in jets in particular, we own a lot of the airports. Outside of the US, in Cancun is public, Paris is public, Thailand is public, and all these airports are just booming.
Excellent. Now let's go towards the gold market. I want to talk a little bit about some gold. And you already kind of mentioned it that in September, we went through this rough time in the markets, but it seems like the precious metals started finding their bounce. Do you feel that this trend can continue?
I do. And what's interesting is the fundamentals. The industry is so much stronger than it was back in 2015 when gold stocks took it under the chin with gold. Today, 60% of these gold mining companies have free cash flow. Back then, it was something like 15% had free cash flow. So the industry is strong. They're going to have to go into a Pac-Man to acquire other people to get reserves. And I think that you're going to see a reset. Now, what I find really interesting is the tangibility of gold coins. It's interesting to see that gold has been under pressure and has far outperformed in a diversified portfolio, the S&P 500, but still it's down. And the gold stocks are down more whenever gold is down. However, gold coins are record sales. Silver coins, record sales. So people want to have something that's tangible. When you go to a Nike store, they'll tell you there's a shortage of pennies and nickels and quarters and dimes. So you're seeing that the psychology of the consumer with all this money printing is basically started hoarding tangible assets. And they start, retail people start at the lower the income level, they understand a penny, they understand a nickel, a quarter. Those that have more wealth, they're buying silver coins and gold coins.
That's interesting perspective there, Frank. It seems to me like it's not the digital move. It's not the metaverse type of move. They want the physical thing. So looks like the collectibles are kind of more getting up. And I think you said it there. I think they want the actual physical thing so they feel they have value, even though, of course you still have value there.
That relates to Bitcoin. It's interesting that Bitcoin falls 70%. And in Amsterdam, there's 3,000 people attending a conference paying $1,000 each. That's just unbelievable. In Austin, there were 7,000 people spending over $1,000 a ticket to go to. If gold fell 70%, no one would show up, even if you gave a ticket to them free. So I think when I look at the opposite of that, and that is the small accounts wallets are growing in Bitcoin. So even though it's been falling, we're seeing people buying a fraction of a Bitcoin and owning it like they're buying a gold coin or a silver coin.
I got lots of questions here. I could go gold. I want to go all these with you, Frank, here. But let's just take it over to Bitcoin. You've opened it up, the conversation here. And it has been a serious sell-off for Bitcoin. There's a lot of cryptocurrencies that are down 80, 90%. Bitcoin has held up better than the others. Do you see this Bitcoin turning around anytime soon? We've been down here at 19,000, I feel like, for months and not going anywhere. Is this like the floor, or are we just basing to go lower? What are your thoughts here? You're obviously doing the mining, so you're making money in different ways, but do you have any projections here on Bitcoin going forward?
Well, what happened, I think, is that rising interest rates also set a scenario for all these asset classes. But in particular, what was growing this time last year were these shadow banks, where they're taking deposits and offering you a yield on a token or something like Celsius, etc.
Yeah.
And they've all imploded. So the history says that when an industry goes through this sort of implosion, it takes at least a minimum of 9 months to repair itself, and it can take up to 4 years. So when a country goes through a debt implosion, like we saw in 97 in Asia, 98 was Russia, it takes 4 years. But I think we're going to see the bottom happen between now and March in the crypto space. And what was really positive that impressed me, what I saw when I was in Amsterdam, where a facility that was 8 football fields, a greenhouse that was 8 football fields in size, was using basically 2 megawatts of Bitcoin machines, that was heating the water, that was creating a greenhouse, and they had nothing but robots picking the red pepper plants. I've never seen, like, it just blew me away. So what we're seeing is that Bitcoin machinery can turn around and heat greenhouses at the same time as make Bitcoin. They can also stabilize the grid. That is, when electricity is basically being wasted or going nowhere, that all of a sudden that's when you can get inexpensive electricity to mine Bitcoin. And we're doing this in Sweden, where we're balancing the grid. And so I see that's interesting to see that the demand for Bitcoin, both the retail and then the institutional person, but there's lots of bankruptcies in this industry because of the shadow banking. It's going to take several more months to repair that, and lawsuits, etc. So we're going to get this sort of trough taking place in this ecosystem.
Frank, I got some mining questions for you here too, and obviously you know a lot about this through Hive blockchain. What happens, like, first of all, where is like the break-even cost for mining? Because it's come down so substantially, I've got to think, it's a tougher business than it was. And what happens just to miners if the price of Bitcoin starts going below, that break-even cost for mining? Does the mining continue? Like, how does that work?
So what historically has happened is that, and before I answer that question, what we're dealing with today is that many of the machines are much more energy efficient, like of a huge magnitude more efficient.
Okay.
And so therefore they need they can deal with a higher break even. However, the industry now, even in Texas, is pushing 7 cents cost of electricity. And a lot of these machines are unprofitable. So unless you have a highly energy efficient machine, you will have to shut down your production, or you're going to be losing millions of dollars a day. So I think that what we're seeing is the older machines are basically unproductive, and they're going to be shut down. The higher performing machines can still be sustainable. What you're going to have is Bitcoin above around $8. That seems to be the threshold. And for a lot of places, you're going to have Bitcoin at 12,000 if your energy costs are like 6 cents. So there's a grade. You got to think of this. What is your cost of energy, and the efficiency of your machines is going to dictate that break-even level.
What I've always wondered this, just building on that question, if the break-even level fell to a point where even the efficient machines are losing money, does everybody still stop mining? And then what happens to Bitcoin?
Because yes, they stop.
So then
remember
what?
This.
Okay.
Is that every day there's about 900 new coins.
Okay.
That's the jump ball every 10 minutes to be able to mine one of those, validate a transaction, and you get a new Bitcoin. Hive is about 1% of the global network.
Okay.
And so if all of a sudden the price of Bitcoin falls and a lot of people are losing money, they will stop mining. And that would mean, if we are still profitable, that we would get a bigger piece of the 900 coins a day.
What happens if the mining just stopped? If the miners just, all of a sudden it wasn't profitable for anyone and the mining just stopped? Does the whole thing fall apart? Like, what happens?
No, they basically shut down, and maybe some people have energy loans or whatever, and they have their problems, but you just contract.
It's just
What
been
we do
trashed.
is we change the position of our machines. We're now upgrading all our machines. If we have any older machine, we're taking our cash flow to buy a more energy efficient machine, which allows us to mine at a lower cost of Bitcoin.
Okay, so there's always going to be mining. There's always going to be somebody that can make money, just even regardless of the price.
Correct.
Okay.
One
Okay,
question
Frank.
here from the
Yep.
chat. This seems like for some reason the audio cut off a little bit. So what was that break-even price that you mentioned? Just want to make sure that the chat caught it correctly.
So for the listeners, it's a X and Y axis. You gotta look for that sweet spot. It is the efficiency of your machine, the energy efficiency that's just really key, and your cost of energy. So different machines have different break evens relative to your cost of energy. So right now, our least expensive energy is in Sweden, where we're paying 2 to 4 cents for a kilowatt. The most expensive, as you're seeing in some of these other locations, they've had a shutdown. That's not affecting Hive, but some people are experiencing in Norway, energy went to 14 cents a kilowatt, 7 times what we're paying. So they automatically have to shut down all the machines because they're losing money. So you have to look at what is your cost of energy, and then what is the efficiency of your machine dictates where your break even is. Globally, right now, it's basically implied that you're going to have like $12,000. Everyone starts shutting, the average person starts shutting down.
Well, we'll definitely wait and see, and we'll have to see if the price actually even gets down there. It's been holding on right now, and so we'll see if we can get through this winter, Frank. Appreciate you like always, Frank
Yeah.
Holmes, CEO here of US Global Investors. I will throw up here the link to the website so you guys can check out all the ETF that US Global ETF has to offer. Appreciate you coming on, Frank.
Thanks, Frank.
Thank you. Muchas gracias, Mitch.
Gracias. Tengo
Have
buen
a good
día.
holiday.
All right, let's go ahead. Let's get back to the stocks action. We still leaking?
Yeah, no, we're starting to bounce off the lows a little bit here. So we stopped the leak, and that's the good news. And I mean, to go higher, you got to first stop the leak, and then you got to start to, fill up the boat again here. But I mean, this is a market that's going to have a lot of chop. This is the one thing in 2022 which has been a given is chop. The VIX still remains elevated. Even on the rallies yesterday, you're not really seeing the VIX come in. To Spinner's point, which is a fantastic point, TLT continues to make new lows. So the bonds just are not believing the equity rally whatsoever. So, I mean, we made a new low on the TLT yesterday. We're trying to break down and challenge that low here again today. So you have that separation. And the bonds have led this market down in the last 6 to 8 weeks. So if you're using that as a tell, the TLT, just looking at that, it means that the recent equity markets, rally could be short-lived. Now, again, that doesn't have to be the tell. It doesn't have to be the case. But I'm just saying bonds have been leading here for the last 2 months. So it's a bold call to say bonds are going to stop leading now, and it's going to be equity markets going forward. So my order of operations is bonds, stocks, dollar. They cycle, they move. It's like futures versus cash. Futures versus stocks, which leads. People, the futures traders say futures always lead. Because they're trading overnight and they're dictating it all. I'll tell you, at certain times though, stocks lead. When you have huge imbalances, it can change the futures. So huge imbalances on the individual stocks. We know this. So sometimes bonds can lead, sometimes stocks can lead, sometimes dollar can lead. Right now, from what I'm seeing, it's bonds, stocks, dollar. I'm using the TLT still as my major indicator here. Continues to leak, which makes me cautious about chasing any type of market rally.
Exactly. I think that's definitely something you need to see change around. We need to see a completely change tune before we get that rally that we're looking for. Today will be kind of, I think, one of those days that, we're just going to have some more chop. I think we can chop up, we can chop down. I wouldn't see us getting through yesterday's highs, 375.45. Do you think that's still in play today?
I'm not even going to try to predict the market. And, people think as a trader, you're in a prediction game and you have to constantly be predicting the market to make money. That's just not the case. You just can trade and you can fade moves. You can do different things. I mean, every trade in itself is a little prediction. but you don't have to be calling the overall market to be making money. Obviously, I trade a lot of inefficiencies and looking at relative pricing, relative spreads, looking for different leaders, laggards, for different tells. But, right now, sometimes I'm pretty good and pretty in sync and saying, yeah, I kind of feel like they're going to buy this, dip here today. And other times it's like, it's really tough. And I mean, right now I'm going to keep saying it. This is why I've kind of been trading as market neutral the last 2-3 weeks here, because it's been difficult to predict day-to-day pricing. Like, I don't have a crystal ball and I can't tell you what this market's going to be at 4 o'clock. I can just tell you right now, there's a tendency to be fading moves. So I would be more of a buyer here today as a short-term trader than a seller, for the simple reason is that dips have been getting bought and rips have been getting sold. And I don't want to fade that trend. If you could chart that on a trend, you can clearly see contrarian trading is winning over momentum trading. You can even talk and you can look out there and you can see what's been happening. The contrarian has had a very good year. Contrarian trading is just simply fading moves. It's, when stocks are going down hard, they're buying. When the stock's going up hard, they're selling. That's what's been working. In 2020, we were a trendy year. You just follow the trend. Momentum trading was working very well. So it's different markets, different environments. Right now, fading is what is still working. So I tend to be more of a buyer on days like this.
I definitely would agree. So the reversals have been kind of the best strategies I've seen.
Titanic, bob up and down.
Let's go to one that we didn't touch is Generac. And
oh my gosh.
They came in here with an EPS at $1.75, down from $2.35 year over year. Sales at $1.09 billion, up from $942.7 million. But as you can see, it did not like this coming in early and giving a pre-announcement here. Generac just getting crushed here in the pre-market.
Okay, a couple thoughts here. This is, obviously just a pre-announcement, so it wasn't scheduled, but it kind of makes sense. I mean, again, and I just built a house, and I bought a Generac generator when I built the house. A lot of times you see GNRC, like Generac, is definitely selling to new builds. New houses, get generators. So if housing is struggling, it's probably predictable that Generac is going to be struggling. And that's the main reason why we were down so much. This is an interest rate play too. It's a luxury item, but it's not something that's like, the rich, absolutely are going to have, or, it's like that middle class is maybe buying generators, can't afford generators now.
Yeah.
So my Generac generator was $14,000. That was
not
Canadian,
buying that.
So, I mean, again, so it's more of a luxury and not a necessity. And it's not something that's like you really, you want that new car. Oh, I want that generator. So this is what has happened. We had free money running the party. This is probably one of the most interest rate sensitive plays you can get. So as rising rates come up, you are going to see demand destruction here first. Just like the autos, we've seen that too. Generac probably right at the very top. If you want to put, demand destruction, you are seeing it here in GNRC from higher rates. Until the Fed pivots, GNRC is a no touch for me. At a certain point in time, it will be a buy. Valuation is going to become attractive. I mean, we've given back the entire 2020 gain. But if you look, we're 2019, we're $50. Could this stock go back to $50 if we, continue to have a Fed raising rates? It's possible. Not saying it's likely, but it's possible. At a certain point in time, if GNRC came back to $50, would I buy it? Yes, I would. So there's a certain point in time, but right now, with the Fed still tightening, I don't think you can give them a green light to buy GNRC. If money managers are looking to buy dips, this is a serious one, but I'm going to just sit this one out.
Yeah, I mean, I don't see anyone going for $14,000 generators anytime soon, especially.
And that's Canadian, so say 10, 11 US.
Okay, all right, a little better, but still expensive, especially in a time that
house.
we're going through.
This is one that
right
powers
now.
my entire house. So when my power goes out, boom, I'm still trading.
That's the key.
Generator kicks in I think 10 seconds.
You're not like me, just connecting it to the fridge and.
Is that what you try to do?
Yeah, I just try to keep the fridge alive, man. If you got the fridge, I mean, got to keep the food.
The main reason I got a generator was for my trading.
Dennis said,
if I wouldn't be in a day trader, I can have a power outage. I don't give a crap.
Especially
but when the power goes out for me, and it happened twice last year, and I didn't have a generator, It costs me big dollars. I have zero production. I'm not working. Plus, I have market risk. Maybe I'm on trades and all of a sudden, boom. So it's just not an option for me. So it's something I absolutely needed to have for my trading.
Tesla tonight. Tesla. What happens to the Tesla Dragon? Gosh. Does it finally get slayed, Dennis?
No idea. This one's going to be a tough one to call. It has been beat up into the number. Expectations are lower. They're lower than they were, say, if this was a month ago, this was reporting. I would say expectations are high. Expectations are fairly low here. Tesla is a luxury item, but it's something that people want. So there's still going to be people who are going to buy Teslas because they're moving over and there's more on the road here all the time. This could go either way. This one's a tough one to call. A Generac is an easier call. This Tesla, TSLA, this is going to be a tough call because expectations are lower. If they can come in just in line, they'll be fine. But if they come in and obviously, it's a mess, I don't think it's going to be a mess, though. So I wouldn't want to be short at going into the report.
It's going to be definitely something to watch. We did get an Apple little scare yesterday with kind of they talking about more production cuts for the iPhone. I'm really interested to hear what Apple's going to say in their earnings report because it seems like everyone knows about their production cuts, but they don't want to tell anybody about it.
Again, another. So you have now Bloomberg. Was it the first that reported?
Yeah,
and now
Bloomberg,
you've got the information
America,
reporting.
The information.
Everybody is saying Apple is cutting production here, and Apple's just not saying nothing. They're trying to find that leak. Who is leaking this information?
Yeah, someone's leaking.
That guy or girl is getting fired.
Yeah, if I was that person
for leaking all this, because Apple doesn't like talking to these companies.
Some time
but
off.
Somebody is leaking information. You know what I feel about Apple. I've had my Apple in my long-term portfolio for a decade, and I hedged the whole thing back at 155. It went to 170. I was like, I hedged a little bit too early. Now it's back there at 141. My hedge is looking a little bit better. I feel like Apple at 24 to 25 times earnings is expensive for this market. I feel like doesn't have the growth that one time did. It will have more products. It is one of the best runs, if not the best run company out there. So I still have lots of exposure through my SPY and my Qs holding. And I just got rid of, and hedged my direct exposure to Apple. If Apple came back down, back down to 16, 17 times earnings, I'd probably reload my position. But I just feel like in this environment, I'm scared that Apple could, maybe not, maybe they don't warn, maybe they do, but it's just not cheap. It's been the multiple expansion. The entire run from the last 2.5 years was multiple expansion. And I feel like we're in multiple contraction environment. I think eventually they come for Apple.
We'll see what happens. Will they come for the generals? They came for them a couple of weeks ago. We'll see what happens to Apple and Tesla today after the bell. You also got IBM. So we'll see what happens in some of these earnings stocks. We're in full mode earnings, and so we'll see what happens today. Dennis, you have a good one. Go get to your trading action and do what you do best.
Thanks, Money Mitch. We'll be back at you tomorrow. We miss you, Joel, if you're listening.
We miss you, Joel. That we do. That's for sure. Have a good one, Dennis. I'm going to get you guys over to live trading that will be coming up next. We don't have the boot camp today. Normally, we would have a boot camp for you, but we got live trading action and was able to bounce back yesterday. Made some good trades. I actually traded Success, a little leverage to the bearish semiconductor. But if you guys want to come over and check out all the trading action, you don't got to go anywhere. Just stay right here. This will bring you right over to live trading. And of course, after that, we got Benzinga live. And later today, I'm going to be trying to do a little bit of a special at the close. I don't have Joel Elconin, but I'm going to try to get it to a couple of guests and make it a little longer. I'll let you guys know, of course, coming up on live trading exactly there. But I want to see you guys over to at the close. There's too many of you guys listening in right now. There's over 1,300 of you guys. Come on over to at the close. That's where we cover the market close and all the action in the intraday. You want to go ahead and get some insights. You want to check out some charts. That's exactly where you want to be. I'll see you guys a little bit later today. Hit the thumbs up on your way out. We'll see you next time right here on Pre-Market Prep.